Hello and welcome to Lunchtime Politics, reaching you live from our global headquarters here in the nation's commercial nerve center, Lagos. I'm Jeffrey Uzongo, bringing you up to speed with the big happenings in politics and in the polity. Let's get to the headlines. In quick succession, gunmen attack Kogi community, abduct 4 persons, raising security concerns in the area. And the PDP National Working Committee resorts to plea, appeals to Southeast Caucus of the party to show understanding as it resolves festering battle over party's national secretary position. Welcome again to the program. Let's start off with what's playing out in Kogi State, where for the third time in 7 days, we understand gunmen have attacked Okoloke, an agrarian community in Yagba West local government area of the state, abducting 4 persons. Now, according to a local source, an unidentified number of armed men stormed the area, forcing their way into the residence of one Ezekiel Durojai, a retiree and respected community leader nearby Okunra village. The attackers abducted him along with 3 others. The latest attack brings the number of kidnapped individuals from the same community to 8 in about 1 week. Quite a very big concern, if you ask me. Now, let's talk some politics, and this is happening in Lagos, where 1 month after he defected from the People's Democratic Party back to the All Progressives Congress, the former governorship candidate of the PDP for Lagos State in the 2023 governorship election, Mr. Olajide Adediran, known as Jandor, has visited Governor Sanwo-Olu at the Lagos House in Alausa. Mr. Jandor, who met with the governor behind closed doors, says he has returned to his family, and part of the issues discussed with the governor is to strategize how to win 2027 elections.
To pay the #1 citizen of the state an official visit to inform him officially of our return to the party. So my visit here today is to meet with Mr. Governor, with a few members of my team, and report to him how far we have come, in the process of us returning back to APC family. So this is why we are here. See us joining our numerical strength to the existing one of the political party, which will now strengthen the winning chances of the party. We all knew what happened during the last election, but it was because the House was actually divided. But now we're together, we're back, and we want to see first how we can use numerical strength to rally around the younger generation and see how we can return Mr. President back to office in 2027 so that they can pass on the baton to our generation next. I've said this over and over again, that if we do that mistake and allow another of his generation to come into that space, we're going to wait for another 8 years, if not 16 years.
Politicians, quite interesting there. Let's stay with Lagos, and this time has to do with some aggrieved people at the local level ahead of the elections that are coming up in July. There were primaries held in Lagos APC to elect candidates for the party in the elections. Well, some people were not happy with the outcome. They are accusing the party of imposing candidates. Let's take a listen to some of them.
Look at all the people here. They are all representing a ward and representing different aspirants of their choice. We have capable hands here, but we will not allow imposition to prevail. We will not allow imposition to stifle the voice of democracy. You understand? When we allow imposition over, these people, Adefuye is unpopular. It's from Bariga. Oshomolu Bariga local government.
The only lasting solution to the political crisis in Agege and Orila Agege is for our leaders to come together and agree on a consensus candidate. not to be left to only one man.
We want peace, and that is why we say he should not be the kind of a person they have to impose on us to make our leaders in Agbado Okiodo.
So from Agbado Kyodo to Agege to Yaba and a couple of other places, so the people at the grassroots quite not happy with what played out at the primaries. Let's talk about what's playing out in the PDP, where the National Working Committee of the party is appealing to the executive committee members of the party from the Southeast zone not to dump the party over ongoing secretary position, national secretary position, which almost split the party into two. The PDP Deputy National Chairman South, Mr. Taufik Arakbaja, made the appeal in Abuja when he received the resolution of the Southeast Zonal Executive of the party regarding the position of National Secretary.
Well, when I read your comic, although that was a little bit of summary, what I read there, sometimes I smile that you consider your position when you believe. You didn't mention it here. But I think everybody read it. Well, I know because you are not happy with the situation. And I understand why you are not happy. But I believe that when all hands are on deck, we can find a lasting solution. It's like a landlord running out of his own house because the house is leaking. And when where you go, you become the tenant there because it's not your house. It's not your natural house. So, although...
All right, let's get to our very conversation for the day. Now, one of the things I have made up my mind to do, and I'm sure that everybody who watches the space, is to the effect that this is the month of May. We'll continue to hold the powerful to account and ask the government how well they manage our commonwealth. And that is more important than all of these defections. Politicians will always do what they want to do. Our job is to ask questions as to how they manage the issue of governance. And one of which is what played out yesterday, the MPC, though the Monetary Authority has now they met and they put the MPR, that's the monetary policy rate, at 27.5%. We're being joined on the program by economists and energy experts, Mr. Kelvin Emmanuel, joining us from Abuja studios. Mr. Kelvin, thank you so much for coming on the program. All right, Mr. Kelvin, can you hear me?
Thank you so much for having me, Jeff. Always a privilege to be here.
All right, fantastic. So let's begin with a quick one. There are a couple of issues I want us to layer through. Fantastic. Okay, I see now. Okay, I want us to layer through a couple of issues from what played out at the MPC to issues around oil and maybe other macroeconomic issues. But let's talk about some people were wondering what the direction would be. Perhaps some people are thinking maybe they are going to hike or they'll retain or they'll even go dovish. But they decided to hold on this one. And I can see all of the numbers, the CRR at 50%, the LR, that's the liquidity ratio at 30%. But I see that the asymmetric corridor around the MPR still wants them to look in the direction of the economy, although the CRR is at 50%. But give us an overview of what do you think the reasoning of the MPC is in making this decision and how it will impact in the coming months inflation of the country.
Jeff, can you take the question one more time, please? I didn't hear the first part of what you said.
Okay, I was just trying to say that looking at the dashboard of the meeting, the outcome of this meeting by the MPC, I'm looking at it, especially I'm looking at the asymmetric corridor around the MPR and some of the things they've done in terms of the CRR. The decision they've made so far, how do you think it will affect the issue of inflation and even liquidity in the system in the coming months?
Well, Geoff, thank you very much. Very important question that corporate Nigeria has been asking. And the fact that the Monetary Policy Committee of the Central Bank of Nigeria decided to keep the MPR at 27.5% is actually a consensus on the rebasing of the cost price index to where the government reports that, and MBS reports that inflation is now down below 24%. And the reason is because usually the interest rate strategy it operates through what they call inflation targeting. And it usually has like what they call the inflation to interest yield curve, that where interest rate targets inflation at around 4%. So if, for example, MBS claims that inflation is down below 24%, you're supposed to have MPR at anywhere around 19%. So the CBN is supposed to be, according to MBS, based on that inflation targeting, be reducing MPR down below 20%. That has, cost, for example, with MPR at 27.5% for interest rates to go above 30% to typically anywhere around 32%. So you have a situation, for example, where cash reserve ratio basically is like the rate at which the CBN requires deposit money banks to warehouse a percentage of all customer deposits in regulated deposit money banks across Nigeria, to pack those percentage, that money at the central bank. Is a tool that central banks all over the world, they use to manage cash money supply in the financial system. So a decade ago, Geoff, CRR was 14%. The global recommended average, according to the Bank of International Settlements, is for CRR to be at 15%. And between 2014 and today, between 2014 and 2022, the past management of the central bank raised CRR to 32.5% from 14%. And they used part of those monies to finance Ways and Means, which was a violation of Sections 38 of the CBN Act of 2007. You saw about $53 billion that was appropriated under Ways and Means without respect for Sections 32, 38 that says that the government is not supposed to borrow money from the central bank beyond 5% of its real revenues for the previous accounting year. A lot of those Ways and Means monies has been, securitized, but they are fresh violations. So a situation, for example, where the Monetary Policy Committee has kept the interest rate at 27.5%, but has kept liquidity ratio at 30%, then has kept CRR at 50%, it means that 50 kobo of every 1 naira deposited in a bank in Nigeria is warehoused at the Central Bank of Nigeria. And the CBN just started paying interest on that only last year. So you have over 6 trillion naira that is deposited at the Central Bank of Nigeria from commercial banks. So the implication of this is that there is a squeeze liquidity in the financial system, and with the heightened interest rates, banks are not able to borrow money to the real sector as they should. So what I am saying, for example, this is something that the Bank of Ghana did that impacted on their interest rate of, is a better way to do it, instead of operate a blanket CRR rate across all deposit money banks, 50% and 16% for merchant banks, is to operate a tiered cash reserve ratio system where banks are rewarded based on their management of what they call their loan deposit ratio or their loan book. So, for example, the better a bank operates their LDR ratio, the more you reduce your CRR as a way to incentivize performance Kelvin, of LDR and lending to the real sector.
Yeah, my apologies, Kelvin, just a moment. Just hold your thoughts and just a moment, we'll come back to it. But we'll now cross over from on our DSTV platform alone for a live broadcast of the Taraba, Made in Taraba International Investment Summit 2025 taking place in Taraba State. But that will be only on our DSTV platform. Lunchtime Politics continues on all other platforms. All right, Kelvin, I wanted you to land on your thoughts on the issue of the what you were analyzing as far as the NPR decision is concerned, so that we can move to other conversations.
Well, the NPR, the Central Bank of Nigeria, the tools that it has within its disposal to be able to manage the monetary policy rate are limited, because the drivers of inflation in Nigeria are more on the fiscal side, okay? The government needs to tackle supply. It needs to tackle production outputs. For example, food inflation is a major driver of inflation in Nigeria. I'll tell you that food constitutes about maybe 55 to 60% of the CPI basket that drives inflation in Nigeria. Energy constitutes about 20%. So between food and energy, you have 80% as drivers of inflation in Nigeria. So the tools that the central bank has are limited. But one potent tool the central bank has to be able to manage liquidity, to the real sector for increasing production in Nigeria, because you've seen like a migration of credit from the commercial banks, you've seen it to the debt capital markets. So you've seen a surge in commercial notes, you've seen a surge in corporate bonds, because the rates are way better than you have for the bank normal bank loans.
All right.
Is to operate a tiered system for cash reserve ratio.
Okay. Mr. Kelvin, I totally agree with you on the points you've raised, because I look at the dashboard, MPR, CRR, LR, the asymmetric corridor around the MPR, and the squeezing is quite intense. Although on one hand, with the asymmetric corridor, they are saying, look in the direction of the economy to see who you can lend money to get your money out. But they're also talking about, they also made reference to the fiscal authorities in that sense. And this is about tapering capital outflow, if you will. But let's come to one strong point you've raised, production and productivity, which in my books, I have looked at it, haven't seen anything that strong. Let's look at the oil industry, for instance. I would like you to speak to this new move of Kolmani looking for oil in the north in that sense. I know that we have more gas across our country. I understand over 200 trillion cubic feet of gas in terms of reserve that can last us for almost 100 years compared to oil or crude oil that is barely 30-something billion in that sense. So you can see the wide margin. But we're still talking oil in that sense. So I want you to talk about what is being done, what is hampering the level of production and productivity we need, especially with our biggest cash cow, which is crude. I annualized 2023. I saw that we're doing an average of 1.2, 1.3. The similar thing happened in 2024. And just the first part of 2025, we're seeing about 1.4, 1.5. So let's average it on the 1.4, 1.5. Even with all the spendings we've done and all the touting we've done, crude oil has still not exceeded 1.5. What is really playing out here? So juxtapose both with Kolmani issue.
Well, Geoff, I'll first of all come from the Frontier Basin Exploration Fund. According to the PI of 2021, August 21st, 2021, that was signed, it says that 30% of profit oil goes to the Frontier Basin Exploration Fund to explore frontier acreages around Nigeria. And before that, if you go back to about 32 years ago in 1993, when the IBB's government awarded 80 oil blocks under production sharing contracts, to operators, what is popularly called PSC 93 in the oil and gas industries, and agreed as part of the fiscal times that the operators, including SNEPCO, which is the offshore arm of Shell, was going to explore in frontier basins. So you have 6 basins in Nigeria, 6 major basins. You had the old Gongola Basin that is now divided into the Benue basins. Yeah, you have the Anambra Basin, which has the Onitsha and Abakaliki Belt basins. You have the Bida Basin, which has the Kudu on the north and then Ahoko on the south. You have the Dahomey Basin that runs all the way from Ghana through Togo and Benin Republic into the southwestern part of Nigeria and cuts through a major river in Ondo State. You have the Sokoto Basin in the northwest, and then you have the Chad Basin, the popular Chad Basin. There's a lower part of it that falls in Nigeria and Borno State, and then there's a higher side part of it that falls in Chad Republic, and that does about between 90 to 100,000 barrels for Chad per day. Most of those crude, because Chad is landlocked, is taken all the way through a Chinese pipe that was built, 1,950 kilometers all the way to Seme in Benin Republic for exports. So, in 1999, SNEPCO had explored for crude oil in the old Gongola, now Bauchi Kolmani, and they drilled, they found about 33 billion standard cubic feet of natural gas. So that was an indication of the fact that, the north has more gas than it has oil. And usually, operators in Nigeria want fields that has more crude oil than gas. And the renewed investments, considering that about $3 billion has been pumped in through Frontier Basin in the past several years, one of the operators got $300 million to explore crude. Considering that in oil and gas, when you're starting, exploration and field development, there usually is what they call the exploratory drilling, the appraisal drilling, and then development drilling. The exploratory drilling usually gives you what they call core samples. You have the well logs from drilling. and then you get the seismic data. From these three facts, you're able to get what they call estimated ultimate recovery of how much you're supposed to recover from drilling that well. So the fact that they've spent all these monies and they've not been able to come and tell Nigerians, okay, this is the estimated ultimate recovery of what we're expecting, is suspicious. And I want to just oppose it with the fact that for Bonga North, Bonga North is a field offshore Delta state and belongs to the Bonga family that started producing in 2006. Shell, under production sharing contract, did a partnership with the likes of Total, the likes of Eni, and to develop that field. Through 3D and 4D seismic, data and modeling, reservoir modeling, without even doing exploratory drilling, Shell has been able to detect that from Bonga North, it will be able to recover 300 million barrels of crude over 10 years, from 2030 to 2040. And it will hit peak production anywhere around 2035 and 2036.
Yes, I get the point. So for the benefit of our audience who are not very, may not be familiar with the technicalities and all of that, do you think this coal money thing is more political, or what are you trying to say here?
Geoff, I will tell you straight up, the exploration of crude oil in the north is a waste of resources because the north has more gas than crude. What I think the government should do is focus on developing fiscal incentives under the petroleum fiscal modeling regime of Nigeria to incentivize operators, especially NEPL, because without NEPL going first, which is the exploration and production arm of the NNPC group, other private sector operators will not be encouraged to come in to produce gas that it needs to feed AKK and the second trunk line that is supposed to go from River State through the southeast all the way to the northeast. Okay? Because gas is a transition fuel. Okay? And gas is important for you to operate under domestic gas delivery obligations and also develop export pipes to take gas out of Nigeria or liquefy LNG. Trying to put more money, precious resources, considering that you don't even have money to fund your budget for 2025 because of the crude oil prices, into frontier basins in the north, when you can put it in the lower Benue Road that has likelihood of more oil, and the Dahomey Basin that has likelihood of more oil than gas. It's fool's gold, and it's political. It's trying to appease to the north. And I don't think that we should make more political decisions than economic decisions at a time when the federal government is looking for money and is having to resort to borrowing or doing forceful agreements to finance its budget. It doesn't make any sense. I expect Bayo Ojulari, who has been in the sector for more than 30 years, to know better than this.
This is a serious conversation. I think even if we don't continue this conversation from here, I think the point has been made. Given the background you've laid, it's now for them to say whether you are right or wrong, because I just gave my own little finding as to the repository of reserves, whether oil or gas in that sense, and how it's distributed across the country and what we should be spending money on. But before I let you go, Kelvin, I won't let you go without asking you about some other issues that has to do with our economy in that sense, and that has to do with the issue of that hydrocarbon framework you always speak about in that sense. The reason I'm asking that question is because I told you the annualization of all the productions from NUPRO's website itself shows that we are dancing around 1.5. So all monies we're spending for surveillance and whatever it is we're doing, we're primarily, in fact, doing more of stability than expanding and increasing production. What is wrong? Is it because investment are not coming in, or they've come in, they've not matured? If you can say that in 2-3 minutes.
Geoff, one of the reasons why the IOCs left the onshore acreages for offshore, deep offshore, is because of technical losses, which is basically stolen crude, from aggregation pipes, wellheads to flow stations to terminals. Okay? The technical losses comes from the fact that, in my opinion, I'll tell you that the Nigerian government does not have an accurate estimate of how much crude oil and gas comes to surface on a daily basis. It doesn't know. Because it relies on an arm called NAPIMS that has a 48-hour delayed loop for transmitting daily production volumes to the government, to all arms of government. I think that's flawed because In other parts of the world where they are major producing countries, they actually have like fiscalization of their hydrocarbon accounting framework. And Section 69 provides a basis, a technical basis on which the government can do that. That the Surveyor General is supposed to develop a geographic information system for all the onshore acreage map for production fields in Nigeria. You meter the wellheads, right? You put temperature and pressure sensors on the pipes, aggregation and transmission pipes, right? You rightly calibrate the meters at the flow stations, which in my opinion, are wrongly calibrated and were mostly not done in Nigeria, right? And then you develop a SCADA, deploy a SCADA, and you create a system where, you know, the daily production volumes are reported real time through screens at major offices in Nigeria. At the villa, the president should not be getting a memo on how much you produce daily from NNPC. It's not the job of NNPC to tell the Ministry of Finance or Ministry of Petroleum how much volume comes to surface. What they should do is have a SCADA that shows them live feed of what happens across the wells in Nigeria, and then call NNPC and the production partners to come and reconcile with volumes in case there's a discrepancy. That's a way to actually encourage operators to invest more money, because I'll tell you that between 12 and 18% of what they produce that comes to surface is lost as technical losses on a daily basis. And this doesn't encourage operators at all, especially onshore.
Wow. So what is the difference between technical losses and outright theft?
Well,
for clarity,
on the balance sheet, the companies can't report it as outright theft, so they call it technical losses.
This is almost laughable. And we're struggling. On one hand, we are doing in deficit of $10 as we speak by our assumption in terms of our budget. On the other hand, our production is going nowhere. The only thing we can do is to increase production.
It's like you pouring water in a basket, you know, and then saying that the way to increase how much of water you retain in the basket is to pour more water in the basket. It doesn't work that way.
Wow.
The way to retain how much water you pour in the basket is by ensuring that you either close the holes in the basket or you don't pour in the basket at all, because the basket is not meant to retain water.
Kelvin, this is an ongoing conversation, because if this is our most important cash cow, accounting for 90 or 80% of our FX in terms of how our FX into the country, what we sell out, because of course oil is the biggest cash cow we have, and we cannot sort out this basic, then we have a problem. It's either an institutional complicity or just outright incompetence. I don't know which is the problem here. But Kelvin, thank you, as always, for bringing your expertise to us on the issues of the oil and gas industry. Thank you.
Thank you for having me.
All right, Kelvin Emmanuel, economist and energy expert, breaking it down for us so you can make a decision for yourself as to how our resources are managed, and can ask more questions to the people in authority now that they are doing midterm since they assumed office. Because without oil for now, we're going to be in a bit of trouble. Thanks for your time and company. I'm Jeffrey Uzoma. You've been served on Lunchtime Politics. Bye-bye.